What's up, money growers? Jacob back here with another video talking to you guys today about credit. All right, so because a lot of these videos I do on this channel revolve around credit, credit cards, things like that. And a lot of what I talk about is getting credit cards that can have great cashback sign-up bonuses, ways to increase your limits, and things you can really take advantage of some of the benefits available in the world of credit, in the world of banking, with traditional banks, with credit unions and things like that. But we're going to talk today about some of the most devastating mistakes people make that hurt their credit score. And this is what leads a lot of people to bad credit, is because they are just not familiar. They just don't know anything about credit and how it works. So let's go ahead. Even though we're looking at a thumbs down icon there because these are things that hurt your credit score and bring it down, give this video a thumbs up because we got a lot more stuff to talk about in the future that's going to help you guys. Because a lot of us, like myself, growing up did not get a great financial education. So if you got anything to share in the comments section, whether you've made these mistakes or you have other advice, please share it down there. Help out other people who are trying to learn and go through this process. Because a lot of people, even in today's age, are still kind of going through this on their own. So let's go ahead and jump into this, all right? Now, here's one of the cool things about the internet and YouTube is you can always find information like this to help you out. So let's talk about how banks see you, okay? This is where people wonder like what their credit score is, what it means, all that kind of thing. So here's how a bank sees you. When you go in there, they really don't see you as like a person, right? Now, of course, the people you talk to in the bank, the people you talk to in the credit union, when you talk to customer service rep over the phone, obviously they know they're talking to a person. They're probably going to treat you with at least a certain level of decency and dignity because you are a customer or a potential customer. But the banking institution itself, I mean, think about the millions and millions and millions of people who bank with different banks, especially the huge ones. They're so big and so bureaucratic, and they have so much volume that really, you're just on paper, you are another number to them. And they really have to see how you fit into certain categories because that's really how they want to get an idea. If you're going to pay them back, if they give you any money, okay, that's really what your credit score is. It's like a financial report card because they're not looking at Greg or Bob or, Lisa or whatever it is. They're just looking at how do you fit into these categories, what's your credit score. So if we give you this credit card, this unsecured credit card, and we let you spend this money, what's the chance that we're going to get paid back as the bank? What are the chances we're going to get our money back? So you look at these things right over here. So the bank here looks at you, even though this may not be what you look like. And they're looking at this right here, this chart. So this is what makes up, when it comes to your credit score. The biggest chunk is the 35% here of the payment history. The next biggest is 30%. That's the amounts owed. So that's like, the amount of debt you have and that kind of thing. So this is 65% right here. Now, the next part, you're looking at credit history. So how long you've had credit. So like, your oldest accounts, like your credit card accounts. And that's why people a lot of times have old credit cards. They've had them for a long time. That helps their credit score. And then 10% credit mix and 10% new credit. But we're going to hit talking about these factors for, like your FICO score and that kind of thing. So let's continue here. First thing that really hurts people is missed payments, okay? Now, if you're late a few days, that's different than being late 30 days or 60 days or 90 days. Obviously, the more days, the worse, okay? This is really one of the big things that hurts people is because they get behind. They start using the card and they have no concept of how much they're spending, no concept of a budget. They've never written out a budget. Even if they don't write a budget out, oftentimes people at least have an idea of how much they can spend. But unfortunately, there's people who they don't know that, they don't do that, they don't take the time to do that, and they wind up getting themselves in trouble, costing themselves more money in the long run and hurting their credit score, which takes time to recover from. So you don't want to get a card and just start spending like crazy and spending money you don't have, okay? You want to spend money that you can afford to spend or you're going to be spending anyway, so you don't wind up getting those missed payments and late payments on your credit report. Now, the second thing we're going to be talking about kind of piggybacks off the first is your utilization gets way too high, okay? So why does utilization matter? This goes back to how you are looked at. Now, common advice is to keep it below 20 to 30%, okay? So utilization means, let's say you have a credit card that's $1,000 limit on it, and you go out and you spend $800 on that card, and then you haven't paid it off, so comes your next billing cycle, it shows that you used $800 of the $1,000, you used 80% of the money they gave you. Now you may think like, yeah, what's the big deal? I didn't use all the money. Well, again, think about how the bank is looking at you, because again, they don't know you. They're just looking at, wow, this person must really need the money if they have to spend this much on the card. So that's why people will say, try to keep it below 20 or 30% that you're spending. Some say 10%. Other people say, hey, 2%, carry a balance, that kind of thing, or just pay it off every month. Okay. That's what I do. I just pay it off every month. Then you don't really have to worry about it. But remember, how the bank looks at you may not be the same way that you're thinking about it. So really, you want to be able to have a credit card with a limit that you don't even have to use that much. Because when you show the bank you don't have to use that much, they give you a higher limit. And when you show them that you're responsible with the amount they've given you, they'll actually give you a higher limit. It might seem counterintuitive, but that's really how it works. If they give you a certain amount and you're just spending, you're constantly getting close to the amount they're spending, you look desperate. Which brings us to the next part, talking about opening too many new accounts at once. People get themselves in trouble with this because banks and credit unions will think that you are desperate for money. They're going to look and say, why is this person going and applying for all these cards or all these loans? You look like you're in a bad financial position. Now, you have to think about it. If you are the bank, you're the credit union, or you're just the person yourself, someone comes to you that you know, and you think they're desperately in need of money, are you going to be, and there's a stranger, okay? This person's a stranger, not a family, not a friend. A stranger comes to you, you know a little bit about them, and you think they're desperately in need of money, and they say, hey, can I borrow money from you? Do you think you're going to get paid back? You're probably going to think twice. You're probably going to think, shoot, the chances of me not getting paid back are really high because this person who you really don't know that well seems desperate for money. Now, you seem desperate for money on paper when you go and you're, applying for all these accounts to try to get more money. Which brings us to the fourth point. You have too many hard inquiries in a short time period. So this piggybacks off of that. You have all these hard inquiries from applying for credit. So if you're running over to Chase and applying for a card there, you're going to have a hard inquiry on Experian. You go somewhere else and you apply and they also pull Experian. You're going to have another hard inquiry on Experian in a short time, showing you keep applying for all this credit. You run over to Navy Federal, apply there. It's probably going to be a hard inquiry on TransUnion or maybe Equifax. But nonetheless, you keep piling on these hard inquiries in a short time period. It's going to look like you're desperate for money when it comes to applying for credit. So and all those hard inquiries, they do temporarily hurt your credit score. It could just be like a few points, but your score will recover. If you don't make any other real major mistakes, your credit score will recover. That's one thing I think a lot of people, and I've been guilty of this in the past, get too worried about a hard inquiry and, how much it's going to hurt you. Short term, you'll take a little ding, but, if you're building up your credit score, you're playing a long-term game. You're playing a long-term game here, so you can build that credit score back, okay? And then again, you're just looking desperate. You look desperate for money and you look like you're in a bad financial spot. So if you're already having a hard time managing money, is a bank or credit union going to look at you and be like, this person can't even manage what they have now. Why would I give them a loan, to manage more if they haven't proven they can manage? That's their perspective. That's what they're thinking. Now, the fifth and final one we'll talk about is closing old credit cards account. And I am guilty of this one because I had 2 credit cards. When did I get them? 2014 or something like that. And this is really, I had credit cards. I knew a little bit about credit, but I wasn't really using them that much. And then I went full on like Dave Ramsey mode with paying off debt, get rid of your credit cards, just do debit, do cash only. And you know what? That did help me get out of debt. That really did help me pay off student loans that I had, Parent Plus loans. You helped get Uncle Sam out of the picture. But as far as credit, that really was not a smart move as far as hurting my average age of credit. So part of your credit score is your average age of credit. Now, closing an old account shortens your average age of credit. That's what it does. So this is the mistake I made because I would have 2 cards that were 7 years old apiece. So that would add more age to my credit if I had those cards. So now the only thing I can make up for that is really time, or you can become a authorized user on another person's credit card. So like a family or friend, they can, if you have a family or friend who's got a credit card that's 5, 10, 15 plus years old, they add you as an authorized user on that card. You can actually get the benefit of that age added into your credit score. So actually it can increase your average age of credit, or you can buy a trade line online. There are places, there are brokers who will do that online. I think there's only a handful that will do it. I know I see on YouTube lots of other people run their own trade line business, but That I'm not as familiar with, but there are some online you can research buying a trade line. And usually, the older the credit card is, that's a huge factor in how much it's going to cost you. Because I think I've seen ones I think you can get for even under $100, and ones that are cost over 1,000. So how old the card is a huge factor, and then also like it can be like the credit limit amount and that kind of thing. But these are like the five of the biggest mistakes that people make. If there's something I missed, definitely tell me about it down below. I am going to ask that you guys subscribe to this channel because I'm doing a video every day right now. And in the future, plan to do like 2 a day and that kind of thing. So I got a lot more coming, a lot I'm working on. The channel's growing quickly. I am happy to have you guys here. I'm happy to have you joining this channel and helping each other out in the comments section. I really do appreciate that because a lot of people are, having to learn on their own. Now, fortunately, today we have so much access to financial information, but a lot of you, like me, probably grew up and did not get a lot of that growing up. So it's still important that we help each other out in the comment section and do things to try to help people who are not where you are just yet. So please share experience. Please share advice. Subscribe to the channel if you haven't done so yet. Thank you for being here, and I will see you again soon.